and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this really annoying, rainy and cloudy Thursday afternoon. I hope you all had a great week so far. As always, before we jump into the markets and my portfolio, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, as always, is go and check out the Elliott Wave Principle. You can read this wonderful book for free when you use the link that's in the description down below. And you can use the same link to get yourself a physical copy as well. That said, magic button, and we jump into the portfolio. We can see we have a pretty much break even starting to the day with a slight red touch to it. Hi Gabby. Gabby, our moderator, is also here. So yeah, keeping order in the unfortunately not yet so active chat, but I think over time that will change. Yeah, so nothing changed in our portfolio, so I'm not going to go into that right now. We're going to jump directly onto the charts. We can see our biggest position is still GameStop with 600 shares held, and against those shares we have 6 covered calls that expire on March 28 at $37. We could theoretically roll them down, but there is the option that the correction that we see here, that according to Elliott Wave Theory, or my application of Elliott Wave Theory, should or could potentially be already the end of wave 4, which would mean that from here on out we should actually get to see a fifth wave that would have a minimum target between 33.89 and an, in quotes, maximum target at 41.47, 41.45, as you can see here in the corner. We can zoom in. Like for us, it doesn't matter that much. Long term, we are bullish on GameStop, but we can zoom in. And again, what we believe, or what I believe, is that we potentially finished a 5-wave impulsive wave up here, and that we're right now basically seeing the following correction. We hit the 61.8 retracement. With the naked eye on the hourly chart, it looks like we have a 3-wave move here that does not get lower than this, which means potentially this could be okay, that doesn't stay on the chart because it's too small. That stays on the chart. So potentially this could be the next wave 1, 2, unless we break the low that we had here at 25.60, which means potentially, if that's the case, we would be next target would be 27.22 to 27.39, or any of the other levels that you can see right now in this extension, but the most common one for wave 3 would be that in our experience. Now that would require, however, that this here, as said, is a corrective wave that potentially could be like this: wave A, wave B, and then wave C takes us down here, which will not stay visible because we are not looking close enough. Maybe if I zoom in further, yep, there it becomes visible. And as said, the whole thing here would be wave 1, and this would be basically wave 2, and we would be currently in our wave 3 upwards, which brings up the question if we can subdivide this into 5 waves. I think it's possible. Either we have wave 1 and 2 already down here, or worst case, this here is our wave 1 with a potential wave 2 here, 3, 4, and 5, and we can see we don't violate any rules or guidelines. If we were, we would see warnings or errors. So as said, this is one possibility, that this is indeed the end of the corrective pattern, and this here is now the first wave. Second wave retraces to 61.8, and from here we are now developing the next third wave up. Yeah, and as said, that's just one possibility. Now we're gonna get rid of that whole pattern and the subwaves here because we usually don't look that close, and zoom out again. The other option, by the way, would be, if we zoom out, that basically this down here is only the beginning of the correction, and this here, so the so-called wave A, if it's a 3-way corrective move, this here will become, no, not like this. So, and this here would then become A, B, and then wave C, before we then see another corrective push down. However, considering that we hit the 61.8 retracement level here, that also happens to be close to the wave 4 area of the previous impulse wave, so that orange wave 4, it stands to reason that we indeed might have hit our correction end here and are indeed now in the next wave up. Yeah, we are on an 8-hour chart, so every day we get around 3 candles more or actually less because markets are closed during the night, but we get 2 candles at least every day. And that means that within a week, we should see if we either break that low and are going further down, or if the current labeling that I just shared with you guys is actually the accurate one, and we're now on our journey up here for the 5th wave. Yeah. If we use Kennedy channeling technique, then we broke the so-called deceleration line here, which would also point towards wave 5. And if we apply Kennedy channeling technique further, then we get the following destination channel that would be starting point here, our suspected point 4, and a parallel through point 3. We don't need the acceleration channel anymore. And this channel here, basically, the median or the top of the channel would potentially mark the end of that 5th wave. We can see our projected target areas. If we were to hit the median, I mean, it could be that we hit it early and then just grind along. So like hit it, bounce, hit it, bounce, hit it, bounce, yeah. But technically by April 5th, we could potentially hit this level. Or if we hit our 100% level, it could happen by the end of March. So because we also sometimes exceed this channel a bit in a so-called throwover. And yeah, so that's there to say or consider about GameStop. Yeah, so overall labeling relatively solid. We're relatively confident in our labeling. We got it quite right most of the time here. The only mistake that I recall making in the past was calling the 5th wave top too early here instead of here. But outside of that, I think we've done quite well with labeling GameStop, especially since this move started here in September. And we're going to keep holding our position and keep selling covered calls at a safe distance. Better to take lower premium, but then in the end pocket a higher profit than to try to get greedy with the premiums and then have the shares called away for or at a too low strike price. But yeah, that's pretty much where we're at with GameStop right now. Now let's reset the zoom here or the vertical spacing and move on. Barnes & Noble Education Inc. There we also hold a small position of, I think, 50. Let's double check. 50 shares, yeah. Yesterday the chart didn't load. Maybe today it doesn't either. Honestly, I might hopefully find the time on the weekend or at least latest next week to look into the issue why sometimes the charts aren't loading for us. But our position is not big enough to cause any worry here. From what I recall, our in quotes worry line, so where we would start worrying about the position or consider closing it at Barnes & Noble Education Inc. is at 831. We're still a decent distance away from 831, so even if the chart doesn't load for a couple of days, it's not a huge deal for our current position. Yeah? We'll give it another, I don't know, 30 seconds or so. I'm gonna hydrate in the meantime, and then we'll see or move on. Can also in the meantime already deal with something else on the other screen. Just a second. Yeah, so I'm just finishing something up on the other screen, and when that's done, then if the chart hasn't loaded, then we'll just move on. So yeah, verify payment method. Okay, I need to enter the OTP. And then there's also a password, if I'm not mistaken. Yep, OTP password. Yeah, so it's not loading, so we're moving on here. Next on the list for the fun of it, we can look into Faraday Futures if it's loading, or Faraday Future Intelligent. Yep, so that one I can delete. Yep, there we go. And then Does it automatically? Yeah. Yep. Okay, that one also doesn't seem to load. Really bad. What's Greenwave doing? Okay, that should be it. Up. And there should then be. Okay. Also not loading, but that's great. Immersion. Yeah, we get a chart, immersion unchanged, unfortunately, so nothing. I mean, we're looking at a weekly chart, so looking at it every day doesn't make much sense because we're waiting for the push down here to at least 766. I actually expect 669 to finish for the corrective wave here, which would also, again, mean that the correction ends at the 61.8 retracement, finishes in the area of wave 4 of the previous degree or of the previous impulse wave of 1 degree lower. So that would be that orange wave 4 here, and hit not only the minimum target for the wave C, but also hit or fall within the target area nicely. Yeah. So here we'll need a couple of weeks for this to play out, but as I said, I expect it to happen and play out like this. Cost. Yeah, there we're actually waiting. We're on a 3-day chart. So again, it will take weeks or maybe months for us to get a clearer picture. We only labeled it till here, and we're not sure. I'm not sure yet about this mess here. We'll have to keep an eye on it, but we need more data on the chart before we make an opinion. Worst case here, to be honest, is that on that relatively small position that I'm holding here of 100 shares that's currently at a loss, that worst case, we book an 80% loss on our position if we hit that price here. But yeah, it's not such a big position, so it's not the end of the world. NEO, yeah, there we are also in, what's it called, like waiting, not waiting, but we're actually anxious to see how this is going to play out. Are we going to break the 401 level and again have to ask us where the heck this correction is going to end? Or are we finally seeing the end of the correction around the 78.6 retracement, actually a little below, which I already don't like, and are now going to see our next waves up? And that sums up that stuff. Bitcoin, we haven't fully relabeled yet, but we expect right now further retracement. It's possible that it finished here at the 21.4. So we're going to add the 21.4 retracement here. As a reminder, corrective waves, so when an impulse wave finishes, corrective waves very often retrace 38.2, 61.8, 50, or 78.6, 21.4%. So the most likely candidates, 38.2, 61.8, those are very often the points where we will see a corrective wave turnaround. Now, I don't recall from the top of my head, but if we look at here, we can see we hit 78.6 and turnaround. It's not the most likely, but it's still one of the likely ones. If we look here, we can see we hit 50% in turnaround. If we look at this wave here, up, we can see we don't fully reach the 38.2, but we break through 21.4 would be somewhere here. So we get close to the 38.2, yeah? And so it's a very, very common pattern that those levels, if we look now at this third wave here, we hit the, or that one we already had anyway labeled, we hit the 21.4% retracement, which could be sufficient, but it's not the most likely candidate. That's why I wouldn't be surprised if we get further downside. Yeah. However, if we again consider the, not rule, but let's say observation or guideline, that corrective waves very often terminate in the area of wave 4 of the previous impulse wave of 1 lower degree, then the 21.4 retracement would actually fit, and the 38.2 would already be past that wave 4. So yeah, that's just something to, in quotes, consider or be aware of. So it's possible that we already saw the bottom in the Bitcoin retracement here and are now developing our next upwards move. It's possible that this is just part of the correction and we still have room down to around at least 82,600 before we then make our way further up. Moving on to, let's check H&T for us relevant. So I would expect that we still get one more push down, as said, to get a little bit lower below 286.3. So basically slightly below the 61.8 retracement. It is theoretically possible that this is the entire correction. This is already a different impulse in some form, 1, 2, 3, 4, 5, and this is a separate correction. But visually, I believe that this is basically one impulse, and we're here getting another big corrective pattern that still should take us a little lower before we get further up. Storage, we don't care. XRP doesn't matter right now. XYO potentially finish the correction here, but we're not 100% sure yet. We'll have to relabel this mess here. And yeah, let's look further. Frontline, yeah, there we were actually saying it looks like the correction finished, and we also have the next 1, 2 in the progress up. Let's see if we get a chart that confirms my memory and gives us some new information. Or we don't. Yeah, we don't get a chart. Okay. DJT. Okay. Yeah, they are potentially 5 waves up as a 1, 2, 3, 4, 5 would need to be a diagonal current retracement. It's going to be interesting to see if this actually marks the end of the correction. We can see this initial move here in a 3-wave move retraces 50%. So potentially this would be enough, and we could be in the next upwards move. But it's also possible that we're looking at some kind of combination where this is part of the correction, and we get another push first down here. However, again, if we visually try to label this, it would be 1, 2, 3, 4, 5. And then again, the 50% retracement would already fit into the area of wave 4 of the previous impulse wave of a lower degree. So again, something like 1, 2, 3, 4, 5. Yeah. And yeah, that pretty much SMCI. Interesting. There should be a little bit more upside here, in my opinion, to make this a big ABC pattern at least. We'll see if that's going to happen. That long swing here is a little bit, yeah, like, not misleading, but challenges that assumption to some extent. We'll have to wait. We're on a daily chart, so I guess in 2 weeks we should know more if we either get to see our ABC pattern. If I'm completely wrong and we finish the overall correction here, and this is already wave 1, wave 2, wave 3 with more upside, or if if something else happens, like we go down from here. As said, in SMCI, my personal opinion is that the stock will eventually end around $5, but we will have to wait and see how it plays out over the next couple of months. Yeah, that pretty much sums up already everything. Like, not much changed. Our portfolio is unchanged. We're still waiting for this year to play out. Basically, we have to wait another week. We can see the calls that we right now have for, or that we right now sold against our shares for March 28 at 37. Are not yet, or have not yet appreciated in value. There also seems to be not a lot of volume. You can see bid-ask spread is insane. Closing them out might prove tricky at some point, but if we were to buy them right now, there's no point in rolling them yet. We still have 43 days till expiration. We got them, I think, on Monday or on Tuesday. And from my experience, the theta decay, so the decay in value based simply on time, so a shorter time that's left for the option, should be the biggest or have the biggest impact from 45 to 30 days. So by holding those options for another week or 2, depending on how the price moves, we might then be able to roll them another week out to April 4th, for example, and pocket a huge portion of the premium. We didn't get a lot of premium. As we can see, we got a $104 premium for those options, so $600 total, minus what we had to pay to close out the previous options. So but that's pretty much it. So I'm gonna say this is it for today. I hope you were able, or let's jump here. I hope you were able to take something away from today's stream. Don't forget, like, subscribe, enable notifications so you don't miss out on future streams. And with that, I'm gonna say thanks for watching. Have a great rest of the day, and then see you all tomorrow, same time, same place, with another episode of Daily Market Mastery. Till then, bye-bye.